Good Friday morning, and thanks for joining us from the Ohio AgNet, Voice You Know with the News You Trust studio, sponsored by Grain Equipment Company, where innovation meets execution. I'm Dusty Sonnenberg. Well, it's a wet one out there. The rain's been falling since after supper last night and continued throughout the night. The barn thermometer says 37 degrees, but it's a cold, wet 37. Between the thaw that started and this rain, it's going to make it pretty sloppy out in the barnyard. The good news is we do need to recharge that soil moisture. Here on the farm, we're almost 3 inches below normal for the year, so this should help cut into that deficit. This quick programming note, be sure to tune in to the midday broadcast on Tuesday as we get an update from the Ohio Corn and Wheat Growers Association. Let's check in now with Dale Minyo as he brings us an industry update from Keystone Cooperative.
Joining me is Kevin Still, President and CEO of Keystone Cooperative Incorporated. Kevin, thanks for joining us. Give us a geographical area. Where does the Keystone Cooperative Inc. operate?
Keystone Cooperative, first two great cooperatives as of March 1st, 2024. By coming together, we now have branches in Indiana, in Michigan, in Ohio, and in Illinois. And the 4 divisions that are our key businesses, one is energy, which is liquid fuel and propane. One is agronomy, one is grain, and one is swine and animal nutrition.
And the nice part about all of that for customers, you can serve a lot of their needs, but one of the big pluses every year for co-ops is patronage refund. What's that going to look like this year?
Well, I'm happy to announce our patronage this year is going to be $68 million. Of that $68 million, $56 million will be paid in cash, $12 million will be paid in equity. And one number we're extremely proud of is we are returning 100% of our profits derived from our members' business. And you might say, how can you do that? It's because of our non-member business is very successful. So it, allows us to return all the profits we make off of our farmers' business.
Why would there be non-member participation? Why don't they just become members?
Because to be a member, you have to be an active farmer. And so, for instance, our home heat and propane business, where we have about 80,000 customers, is a very good non-member business for us. Some of our swine business that we have with Tyson is non-member. And then we have commercial fuel that's non-member. So that all helps feed our income. It allows us to do that.
Hey, Kevin, what's your website for people that want to find you?
Well, they can Google us online and find us at Keystone Co-op. Also on our social media site.
Keystone Co-op, check them out. Patronage refunds coming out. Helps everyone who's involved and the community.
Thanks, Dale. Well, let's get a look now at that Friday morning weather forecast brought to us by Seed Consultants. Simply better performance online at seedconsultants.com.
Got some moisture here as we finish out your Friday. I'm Chief Meteorologist Ryan Martin. Let's take a look at that Ohio Ag weather update. Moisture continues after starting overnight. The heaviest action in southern Ohio, I believe, is done. We may just see some additional hit and miss scattered light showers there. Northern part of the state, it's got a long tail. I think the moisture probably does not finish in northern Ohio until we get closer to midnight tonight. With that, though, we can see an additional 1/10 to half an inch in northern parts of Ohio. Everybody's done and dry on moisture for Saturday with a little bit cooler air coming in and taking control. Behind that on Sunday, temperatures moderate right back with southwest flow taking control. Next week, Monday, Tuesday, Wednesday, I don't have much to talk about here. I think we're mostly in a warmer sector, so temperatures a little bit above normal for this time of year. We do see a significant surge of warm air late Wednesday into Thursday. That leads to rain for Thursday into early Friday, anywhere from 1/4 to 1.5 inches possible because there could be a few thunderstorms embedded in this. Behind that, we cool down for Friday afternoon, and we are chilly for Saturday right on through the following week. I don't think we see a warm air surge again until getting closer to Valentine's Day or beyond. I'm meteorologist Ryan Martin.
Thanks, Ryan. Taking a look at your agricultural headlines, net farm income in 2024 is forecast to be $6 billion less than last year at $140.7 billion. That according to USDA's Economic Research Service. Now, this year-to-year decline is significantly softer than the $35.3 billion drop in farm income from 2022 to 2023. The forecast isn't much different from our prior forecast released in September, but somehow it feels a little more important as we near the end of the year to evaluate the current state of the farm economy as a starting point for considering what challenges and opportunities may lie ahead. That, according to Kerry Letowski, the senior ERS economist who led the farm income team. Now, net farm income aims to reflect the year the production occurred and accounts for the changing grain inventories, depreciation, and other non-cash expenses. Net farm income measures net expenses and receipts in a calendar year. Net farm income at $158.8 billion is forecast $1.8 billion or 1.1% below the previous year. It's pegged at farmers selling more grain than they grew, reflecting the surplus inventories farmers carry from year to year. Both measures remain above the 20-year average. Stay tuned. We'll be back with more after this.
Here's the scoop. Soybeans are fueling Ohio's dairy farms, one glass of milk at a time. Nationwide, dairy farms use the equivalent of 229 million bushels of soybeans every year. Plus, high oleic soybeans boost milk fat and yield, making farms more profitable. From the fields to your fridge, soybeans power the farms that feed families. Brought to you by Ohio soybean farmers and their checkoff.
I'm visiting today with Tad Nicholson, Executive Director of the Ohio Corn and Wheat Growers Association. Tad, some interesting, maybe a little bit confusing news coming out of Columbus as Governor Mike DeWine sent a letter to the EPA basically delaying E15 expansion, even though it's something that we've been able to have some waivers for in the state in the past from his office. Can you tell us a little bit more?
It's a long story, Dusty. We've been working on this for about a decade now, and that is to legalize the sale of E15 during the summer driving season, June 1 to September 15. It's a very simple thing that we want to do, but it would need to change the law of the Clean Air Act. We need to change that to add in the same waiver that E10 gets. We need that same waiver to be for E15 federally. And so federally, we've been trying this for 10 years. And of course, things have moved very slow and hitting roadblock after roadblock. And so finally, in 2022, there were 8 governors across the state that said, enough's enough. If you're not going to get it done federally, we want to get it done in our own states. And they have that ability. It would be basically asking for the petroleum industry to give us a better fuel during those summer months and not needing any kind of waivers. We just keep on permanently selling E15 here. The governor did that in 2022. And since then, though, he has elected to delay the implementation of that. And he did it again this year. And so it's kind of expected. Disappointing for sure, but it was expected because he has done that before. He is hopeful that we will get a federal fix and he won't have to take a state by state action. And so really that's our strategy going forward. All steam ahead, full steam ahead on a federal fix for E15.
Now, in one of the releases that I was reading, it seemed like there was a push by the petroleum industry to walk this back a little bit, or at least to buy more time because they didn't feel they had the infrastructure in place. I guess I was confused by that a little bit. Since we have been doing it in the summer months, what infrastructure would be different outside of those months?
Well, that's something for the petroleum industry is indicating that they need to make some investments in tank storage and those type of things. But the studies we have would say it's going to be very minimal impact. We can do it with relatively ease in the state of Ohio. And so it's just sort of a disagreement we have. But really, I think the petroleum industry doesn't want us to produce a different fuel for the state of Ohio than they have to for surrounding states. And so that's their reasoning for pushing back on this. I will say the petroleum industry is with us on the federal fix, and that's the one good thing, that we are in lockstep. The API, Marathon, Ohio Corn and Wheat, the Ohio Ethanol Producers, Farm Bureau, we've all signed on to joint letters asking for this federal fix. And I think if the governor wants to delay our state-by-state fix, our ask now is the governor should be vocal about this federal fix. And that the next opportunity for him to be vocal is right now, leading up to the March 14th continuing resolution. That'll be the next time when we have a piece of legislation that we believe will move through Congress that we can add in E15 year round and finally get this decade-old problem, which is a very simple one, finally get it done.
Well, Tad, obviously having this go forward would have multiple benefits, both for the consumers purchasing a lower cost fuel, but also for corn growers and farmers as we look at anything that we can get to increase corn demand would help that price that we're trying to increase.
We're not talking about just a little bit of corn demand. We're talking about a really large amount. So here's the stats. Today, 10% ethanol is in our nationwide fuel blend. If we, by adding in E15, having more consumers get access to a higher blend of ethanol in unleaded 88 or E15, if that percentage moves just 1%, nationwide we go from 10% to 11%. It's going to take 470 million bushels of corn to produce that. That's like 80% of Ohio's crop. So when we say we're after corn demand, and this is a very simple and quick way that we can get it, this is a large corn demand that will really matter to the market. And that's why it's so important that we work with the governor and the petroleum industry to get this nationwide fix done once and for all.
My guest again today is Tad Nicholson. Tad is Executive Director of the Ohio Corn and Wheat Growers Association, talking about the upcoming delay in the E15 fix. Tad, thanks so much for your time today and all your work.
Thank you, Dusty.
Stay tuned. We'll be back to take a look at your markets after this. Morton Buildings is holding their annual Building Value Day sales event running now through the end of February. Morton Buildings are built stronger, last longer, and look better. So if you're planning for a garage, farm shop, stall barn, a storage building for your RV, boat, or collectibles, or anything in between, act now and contact one of their 4 Ohio offices by visiting mortonbuildings.com or call 800-447-7436 to take advantage of their current savings on select new buildings. Certain restrictions may apply. This offer is available on select building styles. Contact your local construction center for more details. Let's take a look at what's impacting our markets. Today's market analysis is brought to you by the Louis Dreyfus Company. Excited to be building the newest state-of-the-art soybean crush facility in Upper Sandusky, Ohio. Phone 574-566-2113 for information on soybean marketing to LDC. Here's Ryan Martin.
Grain markets finished sharply lower on soybeans on Thursday. Corn followed the beans down. Wheat markets held on to a few pennies of gain here and there. It was just an interesting day overall. After a huge urge of open interest to the upside on Wednesday, Thursday, we did see, I think, a little bit of a profit taking. We saw beans and soybean meal sagging back to initial chart support. Wheat futures did bounce on continued managed money short covering. The trade volume on Thursday was very active. Longs had been looking to reduce risk heading into the weekend. March soybean futures did hold chart support ever so slightly. March corn also held support. March Chicago wheat was able to push above last week's high of 567. Corn and beans have a heavy price tone. Wheat lacks fundamental inspiration. Overall, this does kind of tip a hand toward more of a bearish stance on soybeans and soy meal. Other grains, corn and wheat especially, may hold on some breaks. Brokers estimate that managed money funds sold 5,400 contracts of corn yesterday, 4,300 contracts of beans, 2,000 contracts of soy meal. They were buyers in wheat. The state-based Plains and Midwest winter wheat crop ratings are expected to fall sharply due to the Arctic chill of mid-January. However, I heard some meteorologists talk about a few days ago about how there's going to be significant winter kill, up to 30% winter kill because of the Arctic blast. That is false, in my opinion, meteorologically. I think there was enough snow cover on wheat that the temperatures were probably mitigated in many areas. We've seen much colder air before, and the wheat has held in okay. We will see what conditions say next Monday. Weekly export sales report showed that for the week ending January 23rd, the U.S. shipped out a record 103,600 metric tons of soy oil, nearly half of that destined for India. I'm Ryan Martin.
Thanks, Ryan. Let's take a look now at those markets brought to us by Seed Consultants. Simply better performance online at seedconsultants.com. With the close on Thursday, March corn was down 6 3/4 cents and May corn was down 6 cents. March soybeans closed down 16.5, while May soybeans were down 15.5 cents. And March Kansas City wheat closed up 8 cents, while March Chicago wheat was up 4, and March Minneapolis wheat closed up 6.5 cents higher. As we take a look at your overnight trade, most everything is lower. March corn is trading down 6.5 cents at $4.83 3/4. May corn is down 6 1/4 at $4.95 1/4, and December new crop corn trading 3 1/4 cent lower at $4.61. March soybeans are trading down 3 1/4 cent at $10.40 3/4. May beans down 2 3/4 at $10.57, and November new crop beans are down 2 cents at $10.51 1/2 cent. Wheat for March is trading down 4 3/4 cents at $5.61 3/4, and the July 25 new crop is down 5 3/4 cent, $5.84 3/4 cent. On the livestock side, we find February live cattle closed the day yesterday down $2.55 at $204.47.5. April cattle were down $3.45 at $201.50. February lean hogs did end the day 47.5 cents higher at $84.37.5 and April hogs were up 60 cents at $91.92.5. Thanks for joining us and have a great day, everyone. You're listening to the Ohio AgNet.